Hello, welcome back to Klever Stocks, and I'm your education wing host here today, Kelvin Yap. So today we're gonna look into some of the greatest investor, or you can call it the master in the financial world. We have looked into Warren Buffett, of course, every one of us we know about him, and also we have like George Soros as well. So today I'm going to share with you guys on one of these master who is a contrarian investor, okay, which his name is John Templeton. So what make it so famous about him is that, or as we all know, okay, we want to be contrarian, but there's a lot of investors out there, especially from Malaysian side. Every one of the retail investors, they always misunderstood of these contrarian investors, which means that they always think that, oh, right now the price is moving up, it's in the uptrend, it's in the bull market, so we should short it right now. No, it's not that way. So John Templeton, his investment way of going contrarian, okay, as a contrarian investors, is based on current, the present market. How is it like? Is it everyone going into too greedy, or is whether is in at the peak of the price of the trend? Okay, so he look into that, then only he go against to the market. So today we're gonna share with you on the 16th method that he used for his investing. So before that, maybe let me share with you a bit about John Templeton. So he's a British, okay? So he founded on Templeton Group, also known as the most intelligent and respected investment guru in the world. And he is Templeton Group, and he's also a fund manager. So his fund management, okay, since the day that he started on this, okay, fund management, is giving out averagely about 13% to 15% every year. So it's very consistent. So you can see like how consistent he can make. So this is the thing that every one of us, we need to learn how to be consistent in the financial market, in our investment. So he left the world with 16 rules of investment success. So this is emphasizing that investment must maintain a positive attitude and dare to buy in a bear market, which you will see in the retail market. A lot of retail investors, they always fear to buy in the bear market. This is, I would say like this is up until today, everyone is doing the same thing. Why? Because in my experience in giving training and also as a speaker for the stock market, I find that the retail investors, they always have that kind of mindset of saying like, oh, are you sure, Kelvin? This stock, is it good? Okay, so usually I share it to my clients because I'm a reminder. So when I share to my clients that this stock, you can look into it because they are about time to going to fly or maybe going to move up higher. But they will, when they check on the chart, they check on the company, okay, they start to ask like, are you sure, Kelvin, this company, okay, the stock price is not moving much, okay, fundamental wise, it's still okay. It's not so much of, you know, good things to look into it, but it's an okay company. But what they will ask, what do I see from this stock? Because when I look into stocks, when I analyze the stock, I will check whether these big boys, they are going into these stocks or not. So usually the big boys, before they push the price up higher, they will start to accumulate their shares. So that's why when they accumulate their shares, they will accumulate it quietly. So when they do it quietly, why? Because they don't want you to find out. So when you don't find out, then they can push the price up later. When they are pushing up the price later, having the news, okay, coming out with good project or maybe good positive news coming out, then you, the retail investor, could see that there's a potential in these stocks and they will buy at a higher price, and that's when the big boys sell the price to you, okay? That is how they make money. So that's why this is what he meant by dare to buy in a bear market. Because from, let's say, for example, when the market crash, you start to see like big boys or hot money are going into a particular segment or sector of this in the stock market, then you can start to move into it. Because for them to buy stocks, they are going to buy a lot. So it's going to take some time for them to accumulate. So if you see this kind of sign coming up, then if you need to maintain a positive attitude and dare to go in together with them. But a lot of retail investors, they don't dare, especially when will the retail investors start to invest in the stock market? When the price rebound. When the price move up higher, then they get the confidence. That's why a retail investor always buy at the peak and sell at the low. And you might think that if this happened to you, you might think that is there someone monitoring me? Okay, whenever I buy, they start to sell and things like that. Actually, yes and no, they are not monitoring you, but you are being manipulated by the big boys using the price movement, okay, or maybe the news also, okay. So of course, John Templeton, okay, why is it there's a Sir in front of his name? Is because he was actually knighted by Queen Elizabeth II in 1987. So that's why he's a knight right now, okay? So one of the most respectful investors in the world also. So he's famously noted is that the market is always born in despair, grows in doubt, matures in longing, and perish in hope. So the pessimistic times are the best time to buy, and the most optimistic times are the best time to sell. So this, what he put, the note here is very important for every retail investor to take note of it. So let's look at the first sentence, all right? So the market is always born in despair, okay? So when it's despair, so people will start to go buying. People would not understand, okay, whether this stock is going to move up higher or not. That's what I mean by the hot money or the big boys, is that time when everyone is despair, they don't know about these stocks, okay, and they are confused, why is this stock doing this? But the hot money or the big boys are accumulating them. So it's creating the market, creating the foundation, okay, setting the foundation to push the price up higher, okay. So the price will grow, okay, in doubt. So when everyone having doubt, like, can this company do well, okay, can this company price move up higher? When everyone is doubting it, then it starts to move up higher and higher and higher. So who actually pushed the price up higher? Who created the demand of the stock price to push it up higher? Is the big boys. So when everyone have doubts, okay, then it will mature when everyone is going in. Because the price have already moved up higher, so the retail investor have the confidence. So which means that the big boys will see like, okay, right now the retail investor, they are, okay, confident because they are starting to buy. That's why it matures in longing. So that is the peak. And it perish in hope. So in perish in hope, very easy. When they see, the big boys see the retail investor have started to buying, and that's where they start to sell. So who actually pushed the price up higher? The big boys, right? So if the big boys push the price up higher, so right now they are throwing the price down, throwing all the shares out. So is there anyone who will push the price up higher? No, because the retail investor have already bought it at the matures, which is at the peak. So when it's at the peak, then the big boys is selling, and that's where the perish happen. And left what in that stocks? The retail investor hoping that the price will move back up to their break even, or better if they can make some small profit out from that. So retail investors always have this kind of hope that why people are not cutting loss is because they think that if I cut loss right now, then I will lose hope. So I got no more chance to actually make back my money. So that is a wrong idea. So if you notice that you are wrong, you have to cut loss. That's it, okay? So enough of this, okay, of what he mean on the notes. So let's dive down into the 16 rules of investment success. First, invest for maximum total real return. So what does it mean from here? Templeton thought it was crucial to recognize how taxes and inflation might erode the investor's investment returns. So it's not wise to put too much money into fixed income securities. So because fixed income securities is not going to fight investment because it's lower risk. Second thing, that you get taxed the same amount as well. So why not you go for a higher return and then get more margin out from there, right? So that is the first thing. So of course, that means that there will be higher risk as well. Then number two, invest, don't trade or speculate. So what he meant here is that, okay, Jack Bogle, he said, get out of the casino, buy stocks and hold them forever. So this is Jack Bogle is father of the index fund. So which Templeton agreed what he said. So he clarified that frequent trades and speculation would consume potential profits and lead to continuous loss. So what does it mean by here is that Yesterday I've talked to my friend, okay, so she came back from US and she asked me like, okay, how's the market here? Is it easy to become a remisier or is there any challenges? Okay, so I told her, yes, it does have challenges because in the retail market, everyone is treating stock market as a casino. So everyone would think like, okay, I just buy, I speculate and stuff like that, but it's not like that. So stock market is somewhere that, okay, we can't change the past and we can't predict the future. It's just the same as how our life it is, right? So the only thing is that we can have ourselves to be true to the present. So what does it mean by present? Like for example, like I have shared with you guys before on the Trump trades and also the Kamala trades, right? So during the president election or maybe Malaysia election, we do not know which party is going to win. So what we can do is that we wait until the election date after they count the ballot and the result came out, which party actually wins it, then we react on it. Okay, so always waiting to that. So we can wait for the time or the result to come out and make our decision. It's not like casino. We have to make our decision before the result is coming out. So this set apart from what is casino and what is stock market. So if you are in the stock market, you are thinking that, oh, right now you think that the future, the price will move up higher because there might be some of the project coming in, then you are betting. If let's say you find that, okay, the quarterly result is coming in, the project comes in, then you analyze it, is the big boys coming in, then you find that, okay, these big boys are coming in, everything sets in, then you make your bet, or not bet, okay, make your investment into that stocks. That is how it works. That is investment. That is not casino, okay? Casino, you make bets before the result is out, and the stock market is that you make bet after the result is coming out. Okay, so that sets a difference. So number 3, remain flexible and open-minded about types of investment. So you are not just fixed with stocks, okay? You can start to venture or look into like stocks, bonds, futures, which can generate better average return, okay, now and then. So it's not always like ETF is better. So you need to look into the whole economic situation, which I have shared with you guys before. Stagflation, what should we do? Recovery, what should we do? What kind of industry should we invest into it? What kind of assets should we hold, right? So look into that, okay? So if you want to find out more on this, like how we should invest in this economic cycle, look back into some of our videos before so you understand better. At least I would say if you're following this way of investment, you won't be, losing too much out from there, okay? So as long as you are not greedy, then you should be fine. Then next, number 4, buy low. So people say it often, but don't act this way. But many investors buy stocks when they are expensive. Templeton believed that chance to buy low appear when most people were pessimistic. So investors must go against the crowd if they want to outperform the market. So this is exactly what you can refer back when during August or July time when the whole market crashed. So a lot of people are being feared. They thinking, oh my God, the price is going down right now. So I fear that it will go down lower. So you don't go into it. So this thing doesn't mean that, okay, you just need to have guts and go in or invest into it, okay? So it's not like that. So you need to go through analysis, see whether the big boy is coming in or not, all these things, whether it sets apart, then you move in, okay? Then you dare to move in. So that's where you buy low, okay? So it's not like you just have guts, okay? I feel that this company, this stock price is going to have a rebound, so I jump in. No, that is a wrong way, okay? So up until here, I'm going to share with you this 4 of this Sir Templeton 16 rules of investment success. So in the next next time, I'll share with you guys the rest of it. So we have 12 more to go. So I'll see you guys again in the next session. Thank you very much for joining.
Klever Stock, the ultimate financial insight for everyone.